I'm pleased to introduce our esteemed presenter, Kevin Watkins, President and CEO of New Cars Inc. Kevin is a local guy. He was raised and currently lives in El Cajon. He graduated from my alma mater, San Diego State University. He started New Cars Inc. back in 1986. He's married with 2 daughters. He collects classic cars and muscle cars and enjoys helping clients find the vehicle they want. So with that, Kevin, the floor is yours.
Perfect. Thank you, gentlemen. Appreciate the opportunity. So going to take about 45 minutes today and run through some slide presentation and talk to you a little bit about the car buying process. As Will said, I've been doing this for quite a while. This is our 37th year in business. And if I didn't like the car process and auto buying altogether, I wouldn't have done it for this long. But I just am passionate about helping people acquire vehicles, finding the type of vehicle they're looking for. So let's dive in. If you have questions, please, at any point in time, hit the Q&A, and I'm more than happy to stop and talk about anything in specific you want to talk about. So we're going to go over this. CalCoast Credit Union has been our partner. We've been working with them for 32 of the 37 years we've been in business. We've helped thousands and thousands of their members buy all makes and models of new and used cars, except for new Teslas. That's our little caveat. We can't help you with a new Tesla, but other than that, we're game on and we can help you with any type of vehicle. So let's first talk about what we're going to go over. How to be prepared, how to do your homework, how to get an idea of what you want to know before you go out and do any automobile shopping. Automobile dealers like to help you with an idea of putting you under the influence of, boy, I'm so excited, I want this car. And they try and get you to make a decision from your heart, not your head. We try and help you work through that process and figure out what you really want to get in a vehicle and do your homework before you go out. Number 2 is understanding the financing process. Kind of complex, not really anything difficult, but it gets into a little bit of the 3 C's and how finance works. And then bottom line finance, last thing I'm going to cover is how our auto buying service works. So start off with what you can afford. So we all have an idea of what our net income is after expenses, and that will give you to a disposable income number. So if you make $3,000 a month after taxes is what you take home, and you have $2,000 in expenses, you have $1,000 disposable income. So that's what the credit union is going to look at for helping you figure out what the budget is that you can afford on that vehicle, what your payments are. So this calculator is on CalCoast website. You can go online, put in all this information, tax rate, wherever you live, what interest rate is, what term, vehicle price, and it will help you with the monthly payment. So there's a great tool there. There's a lot of them out there that can help you figure out, hey, you know, I seen that Lamborghini Urus going down the road and I'm thinking that maybe that's a car I could afford, but I have no idea. So you can go pull this up and find out that $5,000 a month payment is probably a little more than any of us could afford, but you never know. Okay, let's research begin. So buying a vehicle is fun if you do it through a logical process. So make a list of what you're looking for. Narrow it down to the top 2 or 3 cars that you really like. Figure out what's important to you. Miles per gallon, safety, other options. There's all kinds of websites. We'll sort some of them down below here on this screen to help you make a better decision. You can do side-by-side comparisons of vehicles. Many times a Honda, a Kia, a Hyundai will all be comparative in the type of vehicle you're looking for. So pull it up and do some research before you go out to any dealers to kind of narrow down what's important, what you like. So figure out what a reasonable selling price is the next tab. So what's a reasonable selling price and how do you figure that out? Well, there's a lot of tools out there, and one of the other partners at CalCoast is a company called TrueCar. If you go into TrueCar, you can pick out a new or pre-owned car, get an idea, get a bell curve of what other people are paying for that car. So you have a realistic idea of what the actual cash value is, what the market value is of that car today. That's on a new car, especially, that's very helpful. On used vehicles, if you're looking at a pre-owned vehicle, none of them are alike. They're all different. Pull up a Carfax, pull up an AutoCheck, pull up an Inventus report. These are all reports that are out there on the World Wide Web that will help you determine the background of that car to find out, you know, is that car a local car owned by the little old lady in Pasadena? Or is it a car that came from southern part of Texas and you don't know if it's been under the water in a flood or not? So those are all reports that we believe are important for you to look at in determining the value of the vehicle you're looking at, because no two pre-owned cars are alike. Drive some cars. I always suggest people go out and test drive cars. You're in the market, you think you want a $30,000 car, you believe you want an SUV, but maybe a sedan. You know where I send people all the time is to CarMax. CarMax has several locations, one in Kearney Mesa, one in North County. Go there. They will let you drive the vehicles without bothering you. You can test drive 4 or 5 cars, sit in them, turn on the stereo, get comfortable, see if you enjoy the car, take it for a test drive, come back. Great place to go shopping. Probably not a great place to buy a car, even though they sell millions of cars every single year. Their prices are pretty high in relation to the market. So if you have good credit and you're looking to save money on a vehicle, that's probably not the best place to go, because they want to finance you through their own bank. Most of the time, their rates start off at 14, 15, 16%. CalCoast has way better rates, and we believe we have way better pricing. Reference websites. New Cars Inc., calcoast.truecar, which is the website for the pricing, calcoast.org for applying for an auto loan, epa.gov to go and figure out what our miles per gallon and green type vehicles are that make sense for you, and of course, Kelley Blue Book. So those are all good sources. There's a lot more out there, but you can pull up any of those and get some ideas of what you're looking for before you do any other shopping. What other items to consider? What should you think about before you go out to a dealer and just jump into a vehicle and go, wow, I really like this F-250 truck? Here's some other things to think about before you go. Do you have a down payment? How much can you put down? How much do you want to put down? Get that in your mind before you go out and do any shopping, because the dealer is always going to work you for a bigger down payment. Why? Bigger down payment makes a lower monthly payment that makes it fit in your budget. So if you have a budget of $500 a month and no down payment, you may only be able to afford a $25,000 car. But it makes sense if you have $5,000 down, now you can afford a $30,000 car. So they're always trying to up you to a more expensive car that will still fit in your budget. What about your car? What do you want to do with that? Do you want to trade it in? Do you want to sell it? What makes the most sense for you? You have a lot of options. You can trade it in at the dealer where you buy your next vehicle, including here with us. We'll be happy to buy your current vehicle, whether you buy a car from us or not. You can also go to CarMax and get a bid on your car. You can go pick up the phone and call Carvana. They'll give you an idea. So there's a lot of different opportunities for you to get an idea of what your vehicle is worth. So get that part done first before you go to a dealer and start shopping for your new car. So have an idea in your mind of what you're going to realistically expect for your vehicle. Registration fees. A lot of people forget about this. You go in and you find this car, it's the perfect car, it's $25,000, and you don't realize that you're going to have about an additional 10% tacked on top of that for smog fees, document fee, sales tax, license fee. All those fees add up to somewhere between 9 and 10%, depending on where you live, for the tax rate on that vehicle and what the current license fees are. License fees could have been just registered last month, and they could be a $25 transfer fee, or you could have a $600 or $700 license fee on that particular vehicle. So put that in your calculation of what you're going to spend. Auto insurance. This one gets a lot of folks. They'll come in and say, geez, really like a GT Mustang. We go, great, we're happy to get you one. Oh, and I want a stick shift GT Mustang, and I want the 5.0 motor. Wonderful. Happy to help you. How old are you? 22 years old? Great. Before we get the car, though, let's have you pick up the phone and talk to your auto insurance agent and find out what you can afford on this car, because younger age, more performance automobile makes a big difference in what the monthly payment is. We've seen people that have had monthly payments of $300 to $500 a month is what they've been quoted on a particular vehicle they're looking at an M-Class BMW or a high-end performance car, a new Corvette, and that puts them out of their budget. So then they have to rethink what they really want to get, or wait till they get a little bit older, either way. So like the slide says, get a quote beforehand. Talk about warranties for a minute. What's covered under the warranty? What's the warranty on the vehicle? There are some companies out now there that have, 10 years what, 10-year, 100,000-mile warranty, I believe is what Kia and Hyundai have currently. So they have some really long warranties out there. Take advantage of them. If you want a new vehicle with a long warranty, do some homework and find out when you go to the manufacturer's website what the current warranty is on that automobile. Prices vary for each vehicle. Get a quote. If you're looking to buy a pre-owned vehicle, if you're looking to buy a Honda Accord, or you're looking at a BMW, the cost of the warranty, whether you buy it at the dealer or you get a much better buy and buy it through CalCoast through their MBI program, it's still going to be substantially different. Because a BMW is built in Germany and a Honda is built primarily here in the US now. So the price of those vehicles to have a repair fixed is quite different. So the cost of the warranty is different. So that's where you have, I called it MBI, I'm sorry, the credit union calls it MRC, which is their mechanical repair coverage. So get credit union pricing on that before you go to the dealer, so you have an idea of what you should pay if you decide to buy an extended warranty. A lot of the pre-owned cars that you will look at will be under the factory warranty. So if it's a 1, 2, or 3-year-old vehicle and it has less than 60,000 miles, it could still be under the factory warranty. You could still have some coverage. But if you only have 2 years coverage left and you're doing a 66 or 72-month loan, you might want to consider talking to the credit union about the MRC to protect your investment during the time of your making those payments. I don't see any questions yet. Loan protection products. CalCoast also offers a host of products, which is their Coast Guard Plus products for loss of life, disability, involuntary employment, family leave, and their GAP program. So they offer these 2 different programs that are very inexpensive to pay for at the credit union because they're based on credit union member pricing, and they protect you in case you have a particular problem, like you lose unemployment, or you total a vehicle and the insurance company says your vehicle's worth $18,000 and you owe the credit union $22,000. Many instances you would still owe them $4,000 after the credit union, after the insurance company pays off the vehicle. But with a GAP product, you're protected of that. Okay, so you start finishing your homework. You've got an idea of how much car you can afford. You've done a little homework. You've shopped around. You've looked at new cars. You've looked at pre-owned cars. You went out and drove some cars at CarMax. So you've got an idea of different vehicles you're looking for. Once you get down to the 1 or 2 vehicles you're looking for, Google those vehicles and ask for additional information from Google on the wear and tear of that vehicle, or if there's been any recalls on that vehicle, or if there's a blog about problems with that vehicle. Give you a simple example. In the mid 2000s, 2010, 2015, Nissan made a vehicle with a CRT or CVR transmission, which was a vehicle that you could almost never feel it shift. And it was very problematic. We've had 10 or 15 of them in inventory. Most of them we've actually wholesaled because the transmissions just don't last. So CRT is the name of the transmission. So just do some homework and look up a blog and see if there's any problems or irregularities with that vehicle that you're looking at. Many times it's just 1 or 2 years that were problematic. The rest of the time they're good. So again, just do your homework so you don't have a situation where after the fact, after you've went out and bought the car, enjoy the car for a month, you find out, geez, I bought a lemon. I bought a car that's really problematic. So do your homework and then you'll be happy. I think we have a question. Andres, are you going to pull that up or am I doing it? I'll keep going until he comes back.
No, I'm here. I
Okay.
answered the question via the chat. It was a question regarding our rates.
Okay.
We can touch on that after the webinar.
Okay, no problem. So you've went out and done your research, you looked at vehicles, you picked up the tax and license idea, got an idea what your insurance is going to be, talked to the credit union about the GAP coverage, you're ready to take the next step with confidence. You've already got your homework done. What's the next step? Financing. Now, financing is not the funnest thing to go over, but the reality is that majority of people, 90% of people come in here to buy a vehicle need some sort of financing on the vehicle. They're not paying 100% cash for a car. So let's talk a little bit about the underwriting process. Again, this is not rocket science, but I'll just run through it quickly to explain it to you. It's called the 3 C's. Capacity, character, and collateral. So what's capacity? Capacity is do you have the ability to afford this debt? Do you have enough discretionary income that you can afford that $500, $700, $800 monthly payment? Can you make the payment? There's different ratios. There's DTI, PTI, which is debt to income, and payment to income for disposable income. These are ratios that the credit union will look at once you fill out a credit app with them. You can call the credit union and do it over the phone. You can go online and do it. You can drop into a branch and handle it there. So the CalCoast is wonderful because they give you lots of options to help you finance the vehicle that you're looking for. So take advantage of that. Do it however works best for you. If you want to sit down with someone, walk into a branch and sit down with one of their loan underwriters and they can help you through it. If you want to just hop on the internet, go to the website, pull it up, they'll come back to you with an answer pretty quickly. So all debt on your credit bureau is deemed yours, even if you're a cosigner. So what that means is that if you cosign for a family member for a vehicle and you're not actually making the payment, it still counts against you as a payment. If that $350 a month payment is being paid by your brother, but you cosigned, that $350 is still going to go against you for your debt to income. So keep that in mind. What's character? Character is your background. How have you done according to the bureaus on making payments on time? You know, what's the likelihood that you're going to make that payment on time and every month? You know, what's the stability of employment? How long have you been on the job? Is this your first job? Have you been on it 6 months or less? Is this your 10th year with the same company? It shows a ton of stability. Do you own a home? Are you renting? Have you been in the rental for 3 to 5 years? Again, that all shows stability and goes towards the character that you're presenting to the credit union to get them to give you the loan. Collateral. What's collateral? Collateral is the vehicle. So they're talking about what's the relationship of the vehicle to its value. So to give you an idea, let's say we're talking about a Toyota Tacoma pickup truck versus a Ram pickup truck. Well, and I like both, but the Toyota has a lot more resale value to the car, has less chance of breaking down, and therefore the collateral on that vehicle is stronger than the Dodge Ram. Don't hold that against me. I like Dodge Rams. I think the Cummins is the best diesel motor out there, but I'm just using that as an example. So what's the relationship between the loan amount requested and the value of the collateral? Is there equity? And what that means is, are you putting money down? You know, if the loan amount you're requesting is $30,000 and the price of the truck is 35 plus T&L, so you're at 38, 39,000 out the door, but you're going to put down $8,000 or $9,000 and finance 30, you're in a really strong equity position, and there's a much better chance that they're going to give you a loan. Also, if you have lower stability in either your job or residence, the more money down you have, which we call skin in the game, the more cash you have down, the better chance the credit union is going to give you the opportunity to make that loan, because they're in a safer position. Heaven forbid you miss your third, fourth, and fifth payment and the credit union has to pick up the car. They're in an equity position then too, because you put money down on the car. So what's the collateral's model year in relation to the loan term requested? This gets into, let's say you're looking at a 2020 car and you want a 6-year loan. That means by the time you get done paying off that loan in 6 years, you have an 8-year-old vehicle. That's not too bad. But let's say you want a 6-year loan and you're looking at a 2015 vehicle. Well, that vehicle is already going on 8 years old, plus the 6 years is 14 years. You're getting to a point where the value of that car is diminished because of time. So that's what they're looking at. And the credit union will give you a better interest rate on a newer auto loan. So I think it's 16 and newer is one break, and then the next one is I think at 2020 and newer. So take that into consideration when you're getting your loan approved and the credit union says your interest rate is 5.9, 6.9, 7.9, depending on how you credit score, but asks also for what year vehicle that's for. Many times we'll have someone come in and say, geez, I'd like the 2012 vehicle. Okay, fine. Financing at CalCoast. Yes, great. You're going to need $4,000 or $5,000 down. Why is that? Well, because of the age of the vehicle, the credit union may only finance 80% loan to value on that car simply because of the age of the car. Okay. Lastly, make sure you're buying a vehicle for you and not for someone else. So don't get in a situation where you're buying a vehicle and you're giving it to your friend to drive as an Uber car. That's not ethical. probably not legal, and you don't want to get in trouble with whatever your friend does. Heaven forbid there's an accident or something like that and your name's on the vehicle. That's just really problematic. So do not get involved in that situation. Vehicle loans amount needed. Talk about refinance, private party, purchase price, and lease buyout. Again, this is just information to help you depending on what you're looking to do. If you need to refinance a vehicle, you already have a vehicle, you financed it, you want to get a refinance to get a longer term or to get a lower interest rate, you're going to need a 10-day payoff. So you need to check with your current financial institution and get the payoff. Also, you're going to need to know the retail Blue Book value of the vehicle. If you need help, the credit union can help you with that amount, and the transfer fee. So whatever that is. So if you want to refinance a vehicle, those are the things you're going to need just to help you either extend the term or get a better interest rate. Let's say you're going to buy a vehicle private party or at a dealer, you're going to need the Kelley Blue Book retail price on the vehicle to get the loan amount. So the credit union is going to need that information. If you acquire a vehicle from us, of course, we handle that for you and we send the credit union the Kelley Blue Book retail. Purchase price. Also remember that on top of the purchase price, as I spoke earlier about, is the tax and license and transfer fee and documentary fee. It's approximately 10% difference. So you're going to have to realize if you're buying a $30,000 vehicle, you're probably going to be out the door at about $33,000 if my 10% is correct, and I think it is. So that's just good for you to know and think about when you're putting together your information, so to help you make that work for you. Okay. Trade-in, down payment, positive or negative equity. If you have limited credit, a large down payment can improve your chance of approval. We spoke about that a little bit ago. Trade-ins, many times we'll find someone that comes in and says, geez, I owe $15,000 on my car. And we look at the vehicle and appraise it, and Kelley Blue Book trade-in value says the car is $12,500. They're $2,500 in negative equity. Sometimes, depending on your current situation, the credit union will work with you and let you put part of that into the next auto loan. Sometimes they won't. So it just depends on your credit worthiness, whether or not they're going to allow that negative equity to be rolled into the next vehicle. Lease buyout. Let's say you leased a vehicle 1 or 2 years ago. You've now decided that, hey, you know what? I leased this car new. I'm the only one that's driven the car. The payoff is $20,000. I don't see anything else out there I'd like to buy for $20,000 that's as nice as my car. I want to finance this car now for 3 to 5 years. So at that point in time, you need to contact and get the payoff statement from the leasing company. They're going to tell you, hey, your payoff is $20,000. That usually will not include, the tax and license part. So you can check with the credit union for what they're going to charge you in addition for tax and license. If it wasn't quoted in the payoff, CalCoast will collect it, including the DMV fees. So that helps you get out of a lease situation. When you lease a vehicle, you have a couple of options. One, you can turn it in, and if you're in line with the miles that you paid for, 12,500, 15,000 miles, there's no additional fee. If the car is in really nice shape, the tires are good, there won't be any additional fees. You'll just pay the termination fee and walk away from the car. If the car is a little banged up or edgy and needs tires, then the leasing company is going to charge you additional dollars to take care of those charges. But if you choose to pay it off and buy it, then you're not required to pay those fees. You don't pay to put new tires on the car. You don't pay to fix a fender or anything else on the car. You'll just get the payoff amount, and you can finance that with the credit union. Okay. Next, how to get approved. So if you already haven't talked to the credit union, as I said earlier, there's lots of different ways for you to work on getting approved. One of them is the quarterly pre-approval campaigns. CalCoast, a couple times a year, will send out a pre-approval campaign, and it says, hey, you're pre-approved for up to $50,000. All you have to do is send us your current pay stubs to make sure you're still employed, and we can move forward with getting your loan funded for you into every type of vehicle you're looking for. Second is by phone. You can call into the member service center, call them right up. They'll take about 10 or 15 minutes with you and walk you through the approval process. They'll ask you a lot of questions, so make sure you have your bank statements and your driver's license and proof of insurance and all of that gathered up, so that when you get on the phone with them, you're not digging through your wallet or purse trying to find this information. You have pretty much everything you're looking for online. This is my favorite and easiest way. Go to CalCoast, creditunion.org, pull up the landing page, fill it out, takes less than 10 minutes, hit send, boom, you're into the system. The underwriters will look at it. If you do it in the evening tonight at 7 o'clock, they'll pull it up in the morning at 9 o'clock, start going through it. They may call you with questions. They may email you with questions, and they'll send you an approval, and it's very easy. I always suggest you get pre-approved before you go out and start your vehicle shopping. That way you have an idea of what you can qualify for and what your monthly payment is before you start going out and looking at a $75,000 pickup truck when you have a $30,000 approval. So you just get yourself excited and hopeful to buy this really fancy truck, and you don't have a loan that backs it up. So that's why I think it's always important to do that. In person, drop in and visit a branch. Branches sometimes have plenty of time to talk to you. Sometimes on certain days of the month, when you walk into the branch, there's a line out the door. So again, you can go in if you want to sit down with someone. I usually suggest you call the branch and make an appointment so that, you know, they're ready for you when you get there. You're not sitting there waiting for 20 or 30 minutes because they're busy helping someone else. Or you can use the credit union's mobile application. So a lot of different ways to reach out to the credit union to work on your loan. So, and then once you get approved, you can request what's called a drive your deal check. What that will do is give you a voucher, looks like a check that you can take to any dealer, including to us, and say, hey, I'm pre-approved for $30,000, and we will accept that as payment for the vehicle. And then we send documents to the credit union. Credit union sends you any other final documents they need, and it's all handled over over the internet. So it's pretty easy, and it makes it simple once you get approved.
Kevin had a question come through in the Q&A. It might be for Andres. It was, how long are pre-approvals good for once you get that pre-approval?
60 days. 60 days with the credit union.
Can they be extended at all, or do you have to reapply?
You do have to reapply.
Great. Okay. Thank you.
And the other thing is that you have to be careful, and we work with a lot of different credit unions, and you have to be careful because when you get a pre-approval, if you get a pre-approval certificate through the mail, it could say you're pre-approved up to $50,000, but you still need to verify your income. You still need to verify that you're currently approved. Think about it logically. The credit unions did some due diligence, did what's called a pre-screen with Equifax, and you got approved. Well, they don't know that last week you quit your job, or that you decided to retire, or that you were terminated. So that's why they're asking you for a current pay stub. They want to see that you're still making the money that you were previously making. So that's always important to make sure that you have a pre-approval with the part of it that says that, you know, there's no stipulations. You're not being stipped for proof of income. And after you get that finalized, you can ask the credit union for a certificate, and they will email you a certificate that says your name, the amount you're pre-approved for, and with no stipulation. So I think that's always something good to have in your back pocket if you're going to go out and go shopping. Let's talk about what to expect at a car dealership. Car dealerships are a fun experience. The reason they're fun is because it's always exciting to get a vehicle. Challenge is that the dealer wants to make as much money as possible off of you, and you want to get the best deal possible. And sometimes that ends up butting heads. So again, that's why I always say, do your research before you go. Car buying is a two-part process. Most people don't understand this thoroughly, so I'm going to take a minute and talk about it. First part is you walk in the dealership, you look around at vehicles, salesman ups you, it's what it's called, you're being upped. They're the next person in line to help you. And you go out and look at vehicles, you go for a test drive, you decide, hey, this is the vehicle I want. You sit down with this person, you figure out how much is my trade worth, how much am I going to put down, how long am I going to finance my car for, and what's the monthly payment going to be? And you go back and forth, and the salesperson goes back to the manager and comes back and says, okay, we'll give you $300 more for your trade-in if you put down $500 more. And if we take the term from 48 months to 72 months, this is your payment. And you go, okay, that makes sense. And you think it's done. Well, that's only the first part of the sales process. The second part is the paperwork process, which is called F&I, or finance. This is where you go in and sit down with the second salesperson you're going to meet, Their job at that point in time is to convince you that you want to let them finance the car for you. They want to collect a credit app from you. They want to sell you the paint sealant. They want to sell you an extended warranty. They want to sell you the Gap product. They want to sell you door etching. They want to sell you door edge guards, and they want to put helium in place of air in your tires. You can end up spending $6,000, $7,000, $8,000 more than you just agreed upon in part one of buying the car. So you agreed you're paying $30,000 for the car. You now go into the paperwork process, the sales tax and license, maybe 10% of that. So that's $3,000, and you spend another $5,000 before you know it. Protect yourself. Go into the paperwork process, tell them this is how you'd like to finance the car. You're financing it at Cal Coast Credit Union. Pull out of your back pocket your certificate that shows you're pre-approved, and get what's called an option contract. Not a finance contract, an option contract. You want to be able to go to the credit union within the next 5 days, get your funding, and have the time to take the check back to the dealership and pay for the car and get it financed at the credit union. If you don't do that, then you're going to typically spend substantially more money via financing, Gap, warranty, paint sealants, door etching. I saw a contract the other day. They charged some gentleman $350 to take the air out of his tires and put helium in his tires. Not really sure why that makes a lot of sense, but he bought it. What do you avoid? What makes no sense to buy? Makes no sense to extend your term on your loan. If you can't afford the payments that you're going to keep the car for. So let's say you go in and say, I want to trade cars every 5 years, 60 months. But that payment on that car is $800 a month. And you go, I really like the car, but I can't afford $800 a month. The dealer's going to offer you 84, 96 month payment terms. So they're going to ask you to extend the term way longer than you want to keep the car. What does that do? At the end of 5 years, you will still be underwater. You will still not have equity on that vehicle because you've extended the term of the loan so far out that the value of the car has fallen in kind of a straight line, and you've had this bell curve payments. So over the term, you get in a situation where you still owe more on the car than the car is worth. So you get stuck at that point in time and say, geez, I want to get out of this car in 5 years, but I owe $5,000 more than the payoff. So now you're stuck and you're upside down because you didn't want to have that $800 a month payment. I suggest 1, you put more money down. 2, find a different model of vehicle that you can afford, and just don't overstretch yourself, because that's where people get in trouble. And it's very uncomfortable for them to find out that, hey, you know, I'm not in a good position because I took too long of a term on my previous finance on my vehicle. So that is something to think about. Deferred down payment. Do not do post-dated checks for whatever you need to. If you need to do a down payment, have the money in your account, or hold off until you get your down payment put together. But do not do a post-dated check on buying a vehicle. Banks frown on it. Credit unions frown on it. So again, don't do that. Be aware of leasing options. When does leasing make sense? Leasing makes sense when your CPA tells you it makes sense. If you own a business, if you're a chiropractor, if you're a dentist, if you own your own company, many times you can use pre-tax dollars to pay for a lease. When does leasing make sense to a dealer? It makes sense anytime you say that's too much money per month. I can't afford that payment. No problem. Let me see if I can work with my manager to work some magic and help you get to your payment. I know you wanted to be around $500 a month and this payment's $750. They're going to come back and go, guess what? We have a leasing product that can make you perfectly at your payment. So what they're doing is switching you from a buy, which is financing a vehicle for 5, 6, 7 years to go to a zero balance, to leasing the vehicle, which means you're paying it down to about a 40% balance. So if you're financing a $20,000 car at the end of 5 years, you own it. You get the title. Credit union sends you the title. If you lease that same $20,000 vehicle at the end of the term, you're going to owe $8,000 still on it if you want to buy it, or you can turn it in. Why does that make sense? It makes sense in the way that you're only paying the depreciation on the car. You're not paying for the equity. If you own a business and you can use that as a write-off and you can use pre-tax dollars, leasing makes sense. It's a great product. But if you just want to buy the vehicle and own it, leasing does not make sense. If you're doing it just to lower your monthly payment, leasing does not make sense. So plenty of blogs out there and plenty of research you can do on lease buy analysis, but do your homework before you go in and you get caught up into a vehicle and you wake up tomorrow and you go, what did I do? I leased a car. I don't know if that was good or not. Well, do your homework in advance. Consider the cost of dealer products. Next line item. VIN etching, low jack, alarms, paint and fabric sealants, gap, service contracts. These are all great products at the right price point. So what you have to do is your homework to make sure that, as an example, the paint and fabric protection product, we see that all the time, which is now the newest name for it is a ceramic coating. We see it all the time that dealers are charging $1,800, $2,500 for a ceramic coating. The credit union price of our ceramic coating is $895. So you can see it's a substantial difference. It's half or less than what the dealers are charging. So the product makes sense at the right price point. So if you're wanting to buy a product, if you want the VIN etching on the window of your car and you think that's a great idea, so someone can't steal your car and take the parts apart, the windows out of the vehicle, maybe that makes sense at $95. But does it make sense at $595? Probably not. So again, just look at the price value of the items that you're looking at. Lower rate versus rebate. If you're considering getting a lower rate and giving up a rebate, really do some analysis, because we're seeing a lot of times a dealer will say, well, we can get you 0% financing through GMAC, so you pay absolutely no interest. Okay. Or we can give you a $49.95 rebate. Well, if you take the $49.95 rebate and finance at the credit union at a 5.5%, you're probably better off than giving up that rebate and taking 0% financing. So again, do your homework, do the math up front, so you have an idea of what you're looking at spending. No option sales contract. Always ask for a one-pay contract if the dealer allows it. That gives you the opportunity to go to the credit union and get your financing. Okay, there's our logo. We've been doing this since 1986, March of 86. So this is our 37th year. Picture of our facility. We're on the corner of 73rd and El Cajon Boulevard. We have a nice facility. We have a lot of classic cars inside the building. It's pretty fun. Our goal is real simple: save you time, hassle, and money. Again, on virtually any make or model of a new or pre-owned vehicle. So if you have any questions, we can answer questions. You can go to the credit union's website at calcoast.org. You can go to our website. You can call the member service center at the 495-1600. You can call our number at 697-2886. So you have a lot of different options that you can reach out to help you, save time, hassle, and money on virtually anything you're looking for. We've sold about 80,000 cars in the last 37 years. And we're here to help you. So if you have any questions or you want to email me or one of the guys from CalCoast, I'm sure they'll be happy to take your questions and see if we can help you along the process of getting you what you're looking for.
Kevin, thank you very much. That was a lot of great information. But I want to remind everybody, if you do have a question, please use the Q&A function down at the bottom. Is there a better time of the year to buy a car, whether it's new or used?
I would say if you're looking to buy a new car, I would start looking in July or August. And the reason is because that's when we have what's called build out. So the 2023s will stop being produced in probably mid-June. And by the time they get to July and August, the dealers all want to liquidate those vehicles because the new cars will be coming out in September and they want the lot to be empty so they can fill up the lot with the 2024 cars that are coming out. So that's on the new car side. On the used car side, I would have to say it's probably between October and December, which is when it's the slowest part of the time for the end of the year on pre-owned cars. And dealers are wanting to liquidate those cars because if you wait till after the first of the year, you're in the preseason of tax season, which is when dealers are raising the price on cars because they know the government's giving us money back in our tax refunds. So that's right now, we just finished the high season of what used car prices are. So used car prices went drastically up till the middle of April. Now they've started to come back down. So anytime between January and April, those are the hot times to not buy a car. Now you're getting into the season where it makes more sense, and it'll continue getting better towards the end of the year. But bottom line is you need to buy a car when you need to buy a car. There's, something happened in your life, your car broke down, you're expecting a second or third child, you need a bigger vehicle, you start a landscape company, you need another pickup truck. So we're here to help 365 days a year, anytime we can help.
Excellent. Kevin, another question. Does NCI give a lower MSRP than if I were to go through a dealer?
Well, let me answer that question carefully, because it's been the term I've used for the last 2 years has been ludicrous. It's just been ludicrous because of COVID, because of supply and demand, because dealers don't have cars. So we've seen price of vehicles be $20,000, $30,000 over MSRP. That's just the marketing of the price of the car. But what we judge ourselves on is what CalCoast members say they've saved from doing their own shopping. So every time we help a member buy a new or pre-owned car, we ask them to fill out a survey, because that's our report card to send to the managers at CalCoast on how are we doing? Are we doing a good job? And I just happened to review those surveys last week, and on average, it was almost $2,100 better pricing than what the member believed they could acquire the same vehicle for going to a dealer. Now, whether that's over MSRP, if you're looking at a new Ford Raptor truck, it's $15,000, $20,000 over MSRP. If you're looking at a Hyundai Elantra, it's going to be substantially less than that. So it really just depends on supply and demand of that vehicle.
Okay, another question came through. If I apply and get pre-approved and use that check, I think they're talking about the Drive Your Deal check at the dealer, can the dealer take my current car as a trade-in, which I still owe, and the balance get paid with the amount of the pre-approval?
Yes, with an approval of the underwriting team. So if you have negative equity on your trade-in and you want to put that into the Drive Your Deal check, the Drive Your Deal check has set parameters of what that will advance. And if it's above that amount, then that Drive Your Deal check is null and void. So if you're in the right situation and you have negative equity, but you're buying a vehicle at the right price, and let's say you have some down payment on the vehicle, or down payment putting into that vehicle, so that the what's called LTV, the loan to value, is in line for that Drive Your Deal check, then that's fine. But otherwise, you should probably take the one option contract and take that to the credit union branch and have the credit union work with you through that process to see if you need more money down or if they'll advance the entire negative equity.
We will ask you at the credit union when you're getting approved for your check. We will ask you if you're considering trading in the car, and we'll do some homework too there and try to help you get the best trade-in value.
Excellent. Okay, I don't see any more questions. But before we conclude, I want to thank Kevin for your presentation today.